Okay, thank you all for coming to LSE and to CIBL, LSE's Confucius Institute for Business, London. This is the second business briefing. Our plan is to run quarterly briefings in terms of how to do business with China. Now today, it is my pleasure to introduce two speakers. The first one will be Sarah Law. She's from a new company from mainland China. The company is called the Winged Financial Information. It's the Chinese version of Bloomberg. So they have very good, thorough tentacles all over China to report China's economic data. So every quarter, Winged International will give us a business briefing for 5 minutes to show us how China's economic performance has been. This will give us something to chew on. Now, the second speaker tonight is Mr. David Stringer Lama. And he's a well-known business manager and also a busy public speaker. He has several degrees, including law, international relations, and MBA. He basically runs two large corporations. One is Fortis. The other one is Institute of Directors. And David frequently flies all over the world, including China. Now, today he will talk about Brexit and China in that context. So let's welcome Sarah first. She will have 5 to 8 minutes. Thank you.
Thank you, everyone. Thank you, Professor Deng, for inviting us and giving us an opportunity to be here to join tonight's great event. I know most of you have heard about Bloomberg or Thomson Reuters before, but maybe have never heard about Winged Information. So I will give you a brief introduction about us, our company, what we do, what we offer. I promise it won't be long. And then I will show you some slides regarding the major economic updates in the last quarter using the data from Winged Information. First, about the Wind Company. Headquartered in Shanghai, Wind Information is a leading Chinese financial market data provider since the 1990s. In China, 90% of the institutional investors are using Wind for their research and investment. Our flagship product is Wind Financial Terminal, which is commonly regarded as the Chinese equivalent to Bloomberg or Thomson Reuters. Thank you, Professor Deng. But focusing on China's equity, fixed income, and commodity as well as fund market. Outside of mainland China, we have our global presence in major financial centers, including Hong Kong, New York. And over this summer, our London office was just set up in the city of London. Shortly after our establishment in London, we have been cooperating with major mediums like Financial Times, Wall Street Journal, and The Economist to promote China's financial and economic data. You can find some of the China-related issues or special reports have already quoted Wind Information at their data resource. This is a brief introduction to see our interface regarding our Wind Financial Terminal interface. Next, I will show you some updates on China's economy in the third quarter. First, the GDP. China's economy reached 6.7 in the third quarter, which levels with its first and second quarter pace. Coming off last year's China's stock market crash and the surprise depreciation of Chinese RMB, many people have expected China's economy to swoon this year. But so far, at least you can see here, the economy is holding quite up well. Next, China's inflation. China's CPI in last quarter jumped from 1.9% to 2.1%. And you can see here, for the PPI index, over 4 years straight months of deflation, for the first time, the PPI rose sharply by 0.1% negative in September and 1.2% in October. China's export fell 7.3% in October as weak demand continued to weigh on China's economy. Largely in line with expectation, China's imports in October fell by 1.4% from a year earlier, which was an improvement from their performance in September. The figure shows below, you can see the outlook of China's export is not very promising. Given UK's referendum and Trump's presidency, only China's export only to India keeps growing in the last quarter. Take a look at China's industry profit growth. You can see here its growth rose to over 11% in the last quarter, and by breakdown, the profit growth of state-owned enterprises in China, the SOEs, rose to 2.6% in September, which was the first positive growth in the last 12 months. While the growth of the private enterprises slowed down in the last quarter. So you can see the comparison here. China's housing inflation. According to our domestic 70-city real estate survey, the average property price growth accelerated from 1.2% in August to 1.8% in September. And by breaking down, the figure shows the price gains in the first-tier cities remained unchanged, which is 3.1%, while the second and third-tier cities saw gains rise sharply to 2.9% and 1.1% respectively. Okay, last one, the exchange rate. In recent weeks, the Chinese yuan has continued to slide. And the gap between the onshore RMB and offshore CNH exchange rates has been widened in November. And it raises concern that the Chinese currency, the onshore RMB, is going to depreciate and is still under pressure. So overall, given all the data October indicators released so far, we can see a quite steady and moderate growth in China's total economy. If you have any questions regarding wind data, I'm more than happy to discuss during the reception. Thank you very much for your time. Thank you.
It's your turn. Okay. Thank you so much, Sarah.
Which one would you like to press?
I think we can do this one.
You need to cut this from the video.
Sorry.
That's good. Great, thank you very much. I was just checking who I actually am and who I'm supposed to be talking about, so thank you very much. My name is David Stringer Lamar. I'm very pleased to be here with you this evening. And thank you, of course, for this invitation to Dr. Ken Deng and my very good friend Dr. Hong Liu Thank you very much for inviting me to talk about Brexit now and in the future, implications for Sino-UK trade. I can't possibly think of a more complex topic, so it'll be quite interesting, first of all, what I actually say, and more importantly, what your questions and comments are going to be after I've spoken. Before I do say some items on that, I would like to say thank you to Sarah for what she just talked about, those statistics, and also on behalf of my association with the City of London, thank you very much for choosing Watling Street to base your office in. It's most appreciated. So, just to give you a bit of a background about who I am and what I do. So, I'm Managing Director of a company called Fortis Consulting London, and we provide lots of services that help international trade occur. And this includes briefings to Chinese companies, UK companies, and other international companies, specifically around about how to drive up business performance and engage with cross-border trade. I'm also chairman of the Institute of Directors, City of London branch. Now, the Institute of Directors has 34,000 business leaders as members here in the UK. The City of London branch, and I say this always, and I've been on record, is the top branch in the family of IOD. My other chairmen and women possibly don't agree, but that's probably their fault. We have 1,100 members, primarily focused on financial services, accountancy, law and consulting. We cover the City of London, no surprise there, but also something called Canary Wharf, which also does financial services. We have 4 particular special interest groups. The oldest is our China group, which is 10 years old. We have one on financial services, no surprise there. One on property, so interesting to hear about the Tier 1 cities, and one on young executives, which is focused on existing and future business leaders under the age of 40. I'm also very pleased to be a member of the 48 Group Club, the Icebreakers, which focus primarily, or exclusively, I suppose, really, upon China-UK trade. And in fact, it's associated with the 48 business people known as the Icebreakers who set up the first strong business connections in 1954 with China. And I would certainly like it to go on record that I'm very thankful to Keith Bennett, who's the Vice Chairman of the 48 Group Club, who was very kind in discussing with me some of the angles about what I'm going to say this evening. Here's a picture, just to break things up, that's taken from the 10-year anniversary of the IOD City China Club. The chairman in the middle, Mei Sum Lai, Lord Tim Clement Jones, Andrew Leung, and also Sir David Brewer, past chairman of IOD City of London, and also past Lord Mayor. Okay, this is what I intend to talk about this evening. Kent's kindly given me 35 minutes, so I've probably got another 29 to go. I'm not going to read it all out to you because I know you can read, so I'll move on. Now, if casting your minds back, what I want to talk about is this thing known as the referendum, this Brexit thing. What was it about? Where are we now? What's the process like? And where might we be going? And of course, pepper that with some thoughts about UK and China trade, and certainly coming towards the second half of my conversation with you, looking at that more directly. Now, that was the question. Yes or no? Should the United Kingdom remain a member of the European Union or leave the European Union? Nothing more complicated. So lots of people are trying to understand what it means. Was it talking about immigration? Was it talking about regulation? Was it talking about ECJ, etc., etc.? So reading the tea leaves is not an easy job in this particular scenario. These were the referendum results, what I'm sure you know. Overall, the UK voted to stay in, but Northern Ireland voted to remain, and certainly the strongest there, a very big divide in Scotland. Also, London, including the City of London, voted to stay in, as did several other significant cities in the United Kingdom. I mentioned Manchester because that's where I was born. I mentioned Liverpool because that's where my first degree was from. Nothing more substantial than that. Now, at the moment, of course, there's lots of constitutional issues occurring, and the government and our Prime Minister are seeking to try and keep their negotiating hand quite secret. Other people, including business, possibly would like it to be a bit more open. As you know, at the moment, with respect to Brexit, there seems to be surprises all the time. Or was it? So I was with a journalist earlier who asked me, was I shocked by the verdict given by the High Court? I think I've lost the capacity to be shocked after June the 24th and looking at the markets bouncing around, but I wasn't shocked. It certainly is an added complication whether you're voted in favour of leaving or you voted to remain. Yet another element in this constantly changing landscape. I put these things up for you here because, of course, there are 4 countries in the UK, and they all have slightly different agendas. And you already know what's happening in Scotland, and then some of their ideas. Now, here's a nice smiley picture. Now, this was not the case, I can tell you, in the City of London on June the 24th. On that particular morning and afternoon, things were very complicated indeed. Markets were difficult, market makers were seizing up, it was very difficult to trade, and certainly the FTSE 250 took a nosedive, and people became very unhappy whether they voted to stay or not. Those are the stock markets at the close of play yesterday, and you'll see the FTSE 100 very internationally focused, and you're all students, friends, or you sat here in the hallowed halls of LSE, so I'm not going to mention the finances. You'll understand them just as well, or if not better than I. But the international bid up 6.5%, the domestically focused 250.8%, Germany 4%. Notice, please, Paris only at 1, only a little bit better than the 250. Dow Jones nearly 5, Hang Seng 6.5, Nikkei close on 9%. But of course, what's interesting is there's no red on there. There's nothing negative. So it's not like the end of the world actually occurred since June 23. That's not saying it won't happen in the future. Now, the currency markets, of course, those have been bouncing all over the place. These would be red, but I decided that black would probably come out stronger, and this is the pound against all the currencies. And you'll see moving there from, 10.5% up to closer to 15%, so quite a bit of a change. So if you would have staked your student grants, loans, and all the rest of it, possibly on investing in the Nikkei, the Hang Seng, and also did a bit of currency trading, you would have been nicely placed to no doubt pay it off slightly earlier than you might be able to do so now. But hindsight is a wonderful thing, and today really, I suppose, is about looking forward and trying to understand what might be happening. Any questions? Hopefully that was nice and straightforward. Now we're going to get complicated. Process. This is what I can continue to get asked about, and I see there are 4 different clear processes at the moment. Notice at the moment, because it's constantly changing. There's now until we trigger Article 50, allegedly at the end of March, but we'll see what happens as a result of the High Court decision. Then after that, we have a stated 2-year period to reach an agreement. Best of luck seems to be the acknowledged views on the street, unless we fall off a cliff edge and go straight into WTO. I put there time may be extended if the other 27 all agree, plus their subzones, including, no doubt, Wallonia in Belgium, which was quite interesting for the recent Canadian agreement. So that's the second period. I've been talking to diplomats, to business leaders, and we've all been having a conversation, not only really about whether or not 2 years will be enough, because the consensus is undoubtedly not, but how much of that 2-year period will actually be taken up just deciding what to negotiate upon. Many difficult areas, including, of course, the potential bill for leaving the EU, which the Financial Times originally put at 20 billion, but if you've read the FT this morning, other data coming towards us suggests it might be between 40 and 60 billion, so you may be after some money and contributions on the way out, if that is particularly correct. Other issues about the border between the Northern Ireland and the Republic of Ireland. What happens to European Union citizens over here? what happens to British citizens living in the rest of the UK, and indeed something known as Gibraltar, who voted enormously for staying in. So lots of things to talk about before they even get around to talking about them. Then this thing that completely absorbs my attention and many other business people, this transitional agreement. Now, assuming it doesn't fall off a cliff, we're going to have to look at this transitional agreement. What's going to be in it? What can we expect? How can we do business within that particular time frame, let alone how long will that time frame be? That's the big one we're looking at. The third period. The fourth period is really easy, the one I call the Brave New World, because it's going to be there. Of course, the question is, when will we enter the Brave New World? Some figures put it 7 years, some put it 12 years, some put it, oh my God, it could go on forever. And then latest information coming out of the EU, I think it was this morning as well, was talking about we'd rather like a quick divorce, please, and get on with it, and don't let this transition period roll into an actual free trade agreement or anything close to it. Discussion in Parliament, is there a binary outcome? We've heard about hard Brexit, soft Brexit, kind of runny egg Brexit, but Donald Tusk was very clear here. The only alternative to a hard Brexit is no Brexit. But of course that could be a negotiating stance, but that's what he has said. But looking at the future, let me quickly remind you of something that a wise man, Niels Bohr, said. Prediction is very difficult, especially if it is about the future. So bear that in mind, what we're going to talk about this evening, given all the kaleidoscopic changes that occur. Hopefully this man may lead us forward into the valley of enlightenment and keep us all trading happily. Now, possible outcomes. I'm just about to go over here and get some water. That was not one of the possible outcomes. Put that there. Now, these are some of them. The main ones, undoubtedly there might be others, because we are living in a make-it-up-as-you-go-along world at the moment. A possible outcome might be, however unlikely at the moment, we remain a member of the European Union. We might be able to negotiate access to the single market, Norway plus, Switzerland plus, Canada plus, whatever else you want to call it, or maybe a customs union, Andorra or Turkey style. Or this free trade agreement with the EU, which may happen, but gosh knows when. Or we might go back to the World Trade Organization and just rely upon their particular junction, particularly if it is a hard Brexit, which of course some people are suggesting that there should be. The only thing I would say is if there is a hard Brexit, at least we would have clarity. It might not be the clarity we want, but that's certainly one of the occasions where there would be clarity. Now, within all this, it seems that there's an argument over the freedoms involved in the European Union. Movement of capital, services and goods. That's fine, isn't it? But apparently it's something to do with the freedom of movement of people. That seems to be a bit of a sticking point. Rudd, at the moment, Amber Rudd, is talking and trying to change the dialogue to the freedom of movement of labour. Interesting semantics. Maybe they'll buy it or not, but I have a feeling that possibly they will not. Talking from the view of business, what we would rather like is access, of course, to the single market and also freedom of immigration for employees, talented people, etc. You will also probably remember, if you've been following it, that Amber Rudd talked about an immigration point system for skilled workers. Well, that's all very nice. However, the British businesses and businesses here in Britain also required different levels of skilled labour, whether that's from logistics packaging in Amazon depots in the middle of the country to people who pick produce out in Suffolk. These are all people that we need. So there's a major challenge. Also, you may have noticed that there was another suggestion around one of my favourite subjects, is that the restrictions on immigration visas for students. Favourite subject in that I don't think they make sense. Was that, of course we'll allow students in as long as they go to one of the Russell Group universities. However, other universities who are awfully good, but not members of the Russell Group, said, wait a minute, We're rather important, and we also support lots of jobs and incomes here in the UK. So there seems to be, at the heart of it, a very big challenge: market access and talent. Certainly the city corporation was unusual before Brexit, in that it clearly said, and had a big debate and vote to say that the city corporation would support Remain. Very unusual for the city corporation to take on any strong statement like that. Mark Boliat, head of policy, I know him well, talks about we need access to people and we need access to markets. However, possibly part of the Brexit momentum is not in line with that. So there are going to be some challenges to come forward to us. Okay, let's move on here. I quite like this one. Fits in nicely. Cross the river by feeling the stones. Deng Xiaoping. Now that seems to be very useful at the moment, apart from the fact I'm not really sure where the river is. So once we find the river, there's all these permutations, and we have to take it slowly and adapt the course as we go forward. Now, challenges for the UK. Doing okay on time. So that's just a few of them. And I can have some water. We've had a video shot. Now, trade negotiators. We don't have many of them. The UK, that is, because we've not really been doing many big trade deals since 1976, which is an awfully long time ago. If we are going to cut deals with Europe, if we're going to cut deals with China, Brazil, USA, Malaysia, India, wherever, we do not, at this moment in time, have experienced trade negotiators in place to take those forward. So we've got a bit of a challenge. There's a lack of experience in whiteballing, putting these things together, because of course they would be involved in teams in Brussels, but not doing it unilaterally. And I put it there, negotiating not just with our EU friends as a whole, EU 27, but also non-EU. A challenge for the UK is time. Business runs 24/7. It creates wealth, it pays taxes, it creates employment. We need a bit of certainty. It's one of the themes I'm recurring through my little conversation with you. What the biggest problem is at the moment, not only in the markets and business, is this thing known as uncertainty. It's very difficult. It would be very good if we had lots of time, but of course we don't, and all the pieces move around. I'm not completely sure of the agenda of our government at the moment, but I'm not alone in that, and that's not a criticism. It's nice to be amongst friends who also don't know what's going on. But also we don't know, understandably, the agenda of the European Union itself. We know the main negotiator, Barnier, has some certainly strong views that were expressed this morning about what he is willing to talk about and what he's not willing to talk about. We then also need to understand the agenda of the other, or all the EU 27 countries. What do they want? All I can say with a probability of certainty is they don't agree. Germany is probably different than Greece, who's different than Portugal, who's different from the Netherlands. And then, of course, we have the companies. What are their agendas? Multinational companies, SMEs, micro businesses, what are they looking for? I work and engage with many startups here in the City of London and just north, Cambridge, etc., and those are very mobile, talented organisations. They've got agendas. Soon after June 23, we had a meeting of a certain group in the City of London, and there were already stories about high-tech companies were deciding to go to Amsterdam or Berlin instead of London. Only small ones, but they were already going. Why? Because they were looking at the future-proofing. But we've already got a challenge, going back to that bit there about time. And of course, what does China want? What does India want? What does Malaysia want? Etc. You'll have no doubt noticed recently the visit to India. That possibly didn't go as well as it could have done. So our Prime Minister said we'd be very interested in further expanding trade and looking forward to the future. Can you help? Mr. Modi said, of course, in exchange for improvements in immigration and visas. Oh, well, can you just help us anyway? And no, it's got to be a two-way street. Now remember, all this is happening at the same time. Remember the bit about future gazing. At the moment, we've got, let me move on to commerce, sorry. So commerce, things are looking quite rosy. We've heard some things in the financial press this morning. Increased by 0.5 in quarter 3, so nothing to compare with the figures we heard earlier from China. 2.3% higher in quarter 3, 2016, compared with the same quarter a year ago. That sounds good. Purchasing Managers Survey, where are we at now? The last one, 54.3 in October. Anything above 50 is a good thing, so that's useful. Manufacturing only makes up 10% of the UK economy, but seems to be doing quite well. And one thing I picked out is that the depreciation of the pound seems to be increasing export orders from USA, the EU, and of course China. So, interesting numbers there. This morning, Eurostat, if you pick them up in the FT and elsewhere, Germany was up only 0.2%. We've got 0.5 up here, Germany 0.2, Eurozone average 0.3, Euro 28 average 0.4. Interesting, but it's below 0.5. Some people may argue that's a slight blip of what's going on there. But it sounds very encouraging, so that's a winner. All is well then. However, the chief economist, who I saw earlier this afternoon, James Spruill, who's a Canadian, therefore just like the Governor of the Bank of England, said the following when the figures came out. Firms continue to adopt a wait-and-see approach concerning investment. Remember what I said earlier, uncertainty. That's number one. The other big one of the big two problems is investment. Companies have got monies in their corporate wallets, but they're not bringing them out. They're sitting on their hands to take a wait-and-see approach. Why? Because of uncertainty. They're kind of linked. So this is one of the issues. And he further went on, James went on to say, the hope-for export boost from the depreciated sterling does not seem to have materialised. Manufacturing output fell by the largest amount compared to the 3 months prior since the financial crisis. So possibly not as rosy as we would like to think. There are other bits I picked up here from this inflation report out earlier today. What do we have here? Prices should be going up, inflation should be going up, but at the moment not passing it on to their customers. Mark Carney, I saw him earlier, Governor of the Bank of England, said inflation was lower than we expected, but added, I would not take a steer from the October numbers, inflation is going to go up. So, he's not happy, so possibly things aren't quite as good as they might be. New London office construction activity fell by 42% from 12 months ago, as uncertainty cast a shadow across the property market. Government borrowing is going up. Interesting, no doubt it will be, to see the November statement from the Chancellor. How big is the gap? How are you going to fill it? Scotland is very nervous. We've been reading about that in case it means more deficit. Deficit as in reducing the deficit by reducing government spending. IMF, 1.1% UK growth 2017. A lot of uncertainty. Either Morris has been reading my notes or I've been reading his, but there's the word in there, a lot of uncertainty and evidence of deferred investments in the UK economy that will have an impact in that year, meaning, I better point to both screens, meaning 2017. Remember, we're future gazing, looks okay at the moment on November the 15th, but it looks like there may be trouble ahead. I think there might be a song like that, but anyway, I don't quite remember it. Now, let's move on here. The risks. Time some water. You will notice that was all choreographed. I drank so you could actually read at the same time. So you've read it all. Those are the risks, but notice there's some little bullet points at the bottom, or ... because there are many more. These are just some of the big ones that have been pulled out for UK PLC. Passporting, as you know all about, but international talent going down. Now, the main challenge there, please note, is not existing talent. So we've already heard stories about talent planning to go away. Big article on lots of Polish professionals and workers planning to go, but it's also new ones who are saying, thank you very much for the offer for London. No. I'm not bringing my family over here in case in 2 years' time I'm off. I'm going to get kicked out. So major issue for us, because of course the success of companies, success of countries and economies, I believe, is based on useful allocation of capital, opportunities, and of course people, innovation, and the talents that they bring. FDI down, postpone investment, we've got all that lot. Government debt. Now, cost of debt up's quite interesting. Because we've heard, I think it's from, is it Standard & Poor's, that said it may downgrade the UK again. Now, obviously, that's going to push the cost of debt up. That may, therefore, inhibit further the lending of banks to business, which can't be good. However, every challenge is an opportunity. Somebody has recently written, it's in my notes somewhere, I'll dig it out, said that if the banks, in fact, further restrict their lending to business, that's got to be good for alternative finance. That can move quickly. So remember, we look at the challenges and the opportunities. So there may be something in there for peer-to-peer lending, P2P, etc. Because when there's a gap, somebody moves into it. That's one of the good things about innovation and moving forward and looking at what the opportunities may be. EU27 place strong barriers to entry. It's probably about the 5th time I've been through these slides, so do forgive me. But that's one of the things I'm particularly interested in. If you're some of the countries in there, maybe you want to put up barriers. We've already heard about car manufacturing in the northeast of England. Okay, that's one sector. We've heard about bicycles, we've heard about financial services. But there's 27 countries with lots of different sectors in there. Some of them will be going, this is great. I can stick a barrier to entry here. I can get more for me. Times 27. That's got to be a phenomenal challenge for us to actually understand. But no doubt, as we move into the China-UK discussion, there's a strong bridge there, and hopefully we'll be able to move things forward. Having a chat whilst at a 48 group event and listening to the wise words of the Ambassador Liu Xiaoming, who was particularly talking about this, the challenges but also the opportunities, two sides of something. This is what I talk to businesses about. This is an incredibly condensed version because the spreadsheet goes wide, wide, wide. We look at the opportunities and we look at the challenges. You'll see the 4 periods down there that I've mentioned to you. I've only put UK, China, etc. at the top of it. But for a company, this is what we talk to them about. I was saying to you earlier, Kent, I used to play rugby and I went to watch a game at Richmond Football Club 12 days ago or something or other, and I sat next to a gentleman who runs a golf course with lots of international clients. And he said, David, quite frankly, I don't understand Brexit. It scares me to death, and I'd like to put my head in one of our golf holes or bunkers and hope it all goes away. And I said, well, what are you and your board doing to understand it and reply to it? He said, what should we be doing? So we talked about this. Here are the 4 phases. These are the bits of uncertainty that we do or don't know. How are you going to react to it? Your challenges, maybe all your members leave. Another opportunity, maybe you get new members. Maybe the supply of grass goes up, or the price, or whatever it might be, but you've got to map it out. So the real spreadsheets we do for companies are much wider. Now you can imagine for a country, so whether it's UK, whether it's China, you've got the 4 phases, and you go, well, what are our opportunities in these phases? Okay, but what's the flip side of that? Opportunities and challenges. But this matrix that we're using, of course, has to be updated. Not every day, maybe every 2 days at the moment, but it's constantly changing. Brave New World is probably the easy one. You go, maybe there'll be a free trade agreement between UK and China. Hey, that's good, but what are the challenges? The most complicated one, ladies and gentlemen, is that 3rd one, transition. I don't know what it's going to be. Nobody knows what it's going to be. Nobody knows how long it's going to exist for. But companies, future gazers, should be looking at this kind of thing and saying, what are we going to do? What are we doing? I talk about 2 possibilities. We can either look at the future and go, okay, it's challenging. How are we going to deal with it? How are we going to make the best of it? Or which corner should we choose? Or choose the corner over there. We go in the corner, face the wall, and go, oh, it's all a bit scary. I'll just look at the wall and hopefully it'll go away. Business doesn't have that opportunity, doesn't want to do that. We have to react to markets, we have to react to changes, and this is what business leaders are now doing. But that gives you an idea of a way, perhaps, of approaching it, but please bear in mind it's constantly changing. I don't know whether the government's going to appeal the High Court decision regarding Article 50. It might go straight to Parliament. It might not, but we'll see. Okay, so talking about China and UK and what might occur, I was thinking about why the UK might be attractive to China. And then converse in a few minutes, we'll have a look at why China might be attractive to the UK. Because there's got to be a win-win beneficial agreement here. And if you're going to do business with somebody, it is quite useful if it can be on a mutual basis. And it's also helpful if you might even like them. So these are some of the ideas that I wish to share with you. English language, time zone, education. I've not put that there just because we're at LSE, by the way. It normally does stand there. City is a world-leading finance centre, and no doubt will continue to be so in its different guises. Investment here is possible. Now, the reason I mention this is that the German government, as you may know, is getting more reserved in allowing German companies, particularly high-tech ones, to be bought by outsiders, I'm going to use that phrase, and particularly China at the moment. So, the German government has withdrawn approval for the £670 million takeover of chip equipment maker Axtron by a group of Chinese investors who were concerned about China's growing appetite for German industrial companies, reported in the Financial Times the 28th of October. Now, you may remember smart investors, as soon as or pretty soon after the referendum result came in, got hold of a load of money and bought Arm Holdings, the chip manufacturer. Did we say, oh my God, that's really bad? It was, oh well, there we go, someone's come in and done something. So we are open to investment, we're open to having dialogue around this. So that might be a good thing. UK is a gateway to Europe. Notice I put an asterisk, because this is indeed possibly a moving amount of attractiveness that may diminish. And, of course, a UK supporter of China within Europe. Now, as we get more distance, and we already know it's occurring, let's not beat about the bush on this, the UK is getting a less warm treatment, as you might imagine at the moment, from the EU 27, who are possibly feeling a little bit unloved, which is kind of natural. Hopefully, in a while, we'll have a bit of a rapprochement, and we'll start to talk to each other again. But, of course, rather like America is rather concerned, the UK does support China's views, and also those of the USA within Europe, against some others who may not be as positive about them, obviously from a sensible position. The UK also is attractive because it has sound regulation, and we have top law and accountancy firms that are known worldwide. And these are going to be very useful in this One Belt, One Road project, for example. And, of course, it's a market for Chinese goods. So that's half of the picture. What we have been picking up, though, and I have been slightly concerned about, is why Sarah mentioned earlier a thing about real estate, and there have been conversations about the real estate market here in the UK. What I'm picking up at the moment is that the domestic seems to be okay, particularly here in London, as price hunters come in and say, well, the pound is cheaper, I'll buy some, which kind of makes sense. If I had lots of Brazilian reals somewhere, which I don't, then obviously I'd rush in and buy some real estate here, domestic. But what they are talking about, the commercial, seems to be taking a more challenging, or having a more challenging environment. And also the one that interests me, and we've had lots of discussions about, is why more companies are not being bought. The two reasons that seem to be coming forward is that they're not sure whether those companies will still be profitable in the next few years, particularly if inflation or stagflation comes along. And two, if they are not profitable or they just go along, who can they offload it to? This will obviously change, but those seem to be the views that are being expressed to me at the moment when we question the amount of M&A activity that seems to have gone down slightly. Okay, flip over the coin, as I'll wander over here. So we had a bit of a wobble, possibly, over a power station, I believe, I'll call it that, but things seem to have been reoriented, and the golden era seems to be back on track. I meet many delegations from China, and obviously I interact with Chinese business people here, and also British and other business people here, and they do have very positive things to say about the reality of this warmth between the governments and the business communities between UK and China. So that's got to be a good place to start from. Yes, UK would like to improve its trade with other countries, but they're starting from further back. UK and China come together very closely, and that's a very strong board to jump off to go further to the future together. Also, lots of opportunities for global connections via third countries. This is what the governments are talking very strongly about, China and UK coming together to do work in other countries, whether that is in Central Asia, whether that's in South America, or the bit I'm hearing more about now is Africa, but coming together to go somewhere else as partners. One of the delegations we had in was talking about the emergence of London and the city as a renminbi trading centre. It's now the third biggest centre in the world. That has got to be a good thing for the UK and China, of course, because deep capital flows here, deep experts in investment management and raising funds and how to invest them, and of course the renminbi being a reserve currency now is all very useful to this. Investment flows, very useful to the UK. Bring it on in. Bring in the money, please. Invest it sensibly. We often talk in the city, I'm sure you've heard it from your professors here, etc., two different types of money. Smart money, which is useful. It can help you. You can engage with people. Connectivity. And dumb money, that's just trying to place itself somewhere and hoping that it will stick and things will happen. But we welcome smart money without a doubt. And of course, China is a large market for UK services and goods. One of the challenges, I believe, will be as China and the UK continue their discourse, will be opening up the Chinese market more to UK services. But obviously, negotiations will occur. I've already mentioned One Belt, One Road. Lots of tourists coming here, which is good. Lots of students coming here, though I was reading again today that there's large amounts of Chinese students now going to the USA. It was actually an article talking about there's lots of Indian students now also going to the USA instead of the UK. One of the things I would like to mention, if we're over here, are the challenges. So we've got all the opportunities. I see lots of opportunities around tech, because you can move it very quickly. I see lots of opportunities around medtech, China big market, certain demographic challenges it's got there, lots of innovations occurring over here, but there are some challenges. Uncertainty. What on earth are we negotiating? When are we going to negotiate it? I've mentioned governments and negotiators lacking experience. Number 3, we work in this particular area, and I certainly support the work of the Confucius Institute here as well on this, because there is, certainly from the UK side, you'll know better about the China side, a lack of ability and knowledge of businesses to work together, of UK-based businesses understanding how to do business with Chinese business people, and vice versa. How to negotiate together, how to make decisions together, how to present. There is a challenge there. Yes, we'd like to do business, but if we don't know how to transact that business in a beneficial way and how to move the deal along, it's not going to happen. So it's very useful here, the Confucius Institute and the work you do around Mandarin, the work you do around business and cultural etiquette. These are essential. You can have the best products or the best services in the world, but if you can't do a deal with somebody, it doesn't matter. Competition from other countries, of course. India would like a bit. Malaysia would like a bit. Brazil, the USA, of course, and the new president-elect would like a bit. We've got lots of domestic politics. global politics, and we've talked about access to market, and immigration. I think I've probably covered, and so you've probably had enough of that, is that we would rather like talent coming in. However, the agenda seems to be about restricting that talent. It could be a points-based system, but that might be very complicated in terms of the bureaucracy. Let me just share with you, Mark Bodiat, again, Policy Chairman at the City of London Corporation. Brexit provided a rare opportunity to re-examine the visa system and come up with a model which is tailored for our regions, and this is the bit I like, and flexible for business. It's got to be flexible for business, and of course those people involved as well. Seamus Nevin, Institute of Directors, warns that the permit and visa processes are inherently time-consuming, onerous and expensive. We don't like that. Business likes to get on with things. We want to create wealth, we want to pay taxes, we want to create employment. All the rest of the stuff, get it out of the way so we can get on with it. Those are some of the challenges. But no doubt there's a view about challenges. Our greatest glory is not in never falling, but in rising every time that we fall. Confucius. Just this bit over here for you. I like the phrase here from Mislav, JP Morgan, Brexit is a wild card. We're not completely sure what's going to happen. If you only take three things away from my words here, uncertainty, lack of investment, and we're not really sure what's going to happen, Brexit is a wild card. The FTSE 100 in the UK is seen as a haven. Brexit could upset this perception, which would be negative for all corporate earnings, etc. Watch this space. Every morning, in fact this morning was worse than usual, because I got up and I said, I've done the slides, I'll send them over, it's all beautiful. Then there was loads of stuff about Brexit all over the information channels. It was like, no! How can you have done this to me? I stopped work last night at 11 o'clock and the whole flipping world changed again. But that's where we are with Brexit. And I suppose one of my favourite quotes sums it all up from Politics Days, Heraclitus, Greek, the only constant is change. And that is exactly what we're living with at the moment, whether you like it or not. I'm conscious of the time. I'll finish in 2 minutes, if that's okay with you.
Absolutely.
Is that okay? Yeah. Now, this is the bit, achieving success, preparing to win. So we've had our time to cry. Some people have had their time to celebrate. We've gone, crikey, what's going to happen? But of course, business gets up, dresses itself down a bit, tightens its tie, should you be wearing one, and says, how are we going to prepare to win? This is what I like to look at. Whether it's China, whether it's UK, whether it's Netherlands, Germany, Malaysia, wherever. We've got to be flexible. We've got to play what's in front of us. We've got to have a strategy, but we've got to be able to move. We've got to be agile, move into different sectors. We were talking earlier, think in a different way, embrace change, question what's going to happen. What's going to be after blockchain? That's the bit I'm interested in. As many of you in the audience have heard me speak before, I think blockchain's terrific. When's it going to arrive? Gosh knows. But I'm not even interested in that. I want to know what's after blockchain. Innovation, which obviously takes me there. And we've got to have wide international engagement. One of the great things here is we can talk, we can do business with anybody. At the moment, stage 2, stage 3, stage 4. Wide international engagement. At the moment, possibly, we've consistently focused on the EU 28, including UK. Yes, we've looked at China. Yes, we've looked at India, etc. But not as much as we should have done, perhaps. This is therefore an opportunity for that. And the basis has got to be collaboration, where we win, win, win. Diplomacy will be at a very high level, so we make sure mistakes do not happen, or when they do, we know how to get out of them. And of course, we look for opportunities consistently. And I really do believe there is a strong future between the two nations, all the nations, but particularly the UK and China. And there's me in the rain of the Lord Mayor's show last year. And it always seems to rain on Lord Mayor's days. I said to them, why don't you move it? I said, well, that's a very good question. I said, would you mind answering it? But really it is, one of the Lord Mayors would have to lose a few months. So that's just not going to happen. Right, this is where we came from. There's the title. Brexit now and the future implications for Sino-UK trade. I think strong foundation for future, closer cooperation. I think there's a desire, I believe there's a desire between companies and governments for a win-win benefit. It's a very, very fluid situation. I think I've made that pretty clear. Time frames are definitely not clear. We need to improve UK-Sino business-to-business skills, and I know the Confucius Institute here will do their bit in taking that forward, and the UK and China can operate together in a global market. And I'll leave you with this thought here. When it's obvious that the goals cannot be reached, do not adjust the goals, adjust the action steps. Thank you very much.
Well, thanks so much, David. This is a fabulous public speech. It's very informative and insightful. Let me abuse my position as a chair to raise just one question. It takes two to tango, yeah? Now we know the Brexit decision eventually allowed the UK to abandon the old dancing partner, and UK is searching for a new partner, but tango goes on. Absolutely, you're right. We have this transitional problem because we don't have perfect knowledge. But however, it's kind of exciting because you have new partner, you have new marriage, right? You have new love. So I'm hoping, love is in the air for the UK. So how do you think about this? It is more positive because you're looking for, the tango goes on, right? So it's not the end of the world.
I like your analogy very much, Ken. Thank you very much for that. And your question about, well, first of all, will the UK abandon its old dancing partner? And this idea about new marriage and new love. I would suggest that we're not abandoning our old partners. Bearing in mind we've got 27 of them. Yes. So in terms of your marriage analogy, that's already a lot of husbands and wives involved in one particular family. And we're rearranging the relationship, I would suggest, within that particular family. And you suggested the tango, which is quite a raunchy, close-held dance. So maybe we'll actually be dancing slightly with our hands further out, shall we say, away from each other. But I think we'll still dance. At the same time, we will be looking around the auditorium, the dance hall, for other people, possibly to share the love with. And as we've already, I've got to be careful what I say here with this analogy, as we've already seen the attractiveness of China as a potential dancing partner, and hopefully China has gazed upon the attractiveness of the UK, there is already a good starting place to add another person to the family, if that makes sense. So the dance continues. I think it's more going to be a bit more complicated. It may involve a bit of rock and roll and punk and God knows what else. But we're not abandoning the past. It's going to be a changed relationship. I think the new relationships are also going to be different in that maybe where we were dancing with arms outstretched, it will become closer.
It's a different dance. It's no longer tango, but it's dancing anyway. Thank you so very much. The floor is open. Any questions, please? Yeah. Lady, you go first.
Oh, thank you.
I think there's a microphone coming, is there?
Yeah. Okay.
Apparently they don't get paid unless they use the microphones. It's the lady here.
Thank you, David. I just would like to ask you, how likely, in your opinion, how likely is a hard Brexit? Do you think once the Parliament debates about this issue, it makes a hard Brexit less likely? But anyway, we'll find out the outcome very soon, since the Supreme Court will discuss about it. And then I think people here, sitting here, also would like to know, what is the prospect of the pound sterling? And do you think, well, of course, for overseas investors, and if pound sterling decline further, that's great, because it means renminbi are going to be worth much more. And do you think now is a good timing for overseas investors to buy, for example, real estate? Thank you.
Okay, so I think you owe me 3 glasses of wine, because that was 3 questions I've noticed. So the first one I'll take was what was the likelihood of a hard Brexit, and has that changed because of the recent decision in the High Court? At the moment, of course, bearing in mind, as I've said, everything is uncertain. We've heard that the President of the European Union has talked about this binary decision, whether there can be a hard Brexit or not. There's only 2 chances. You either stay in or you get out and you're finished. Now, some Brexiteers want the hard Brexit. I don't think it's something that's wanted by business as a whole, because we have then the issues around this World Trade Organization and having to gain access to that and deal with the tariffs and challenges that are within that. So I'm not, at this moment in time, I don't think there's a great probability of a hard Brexit. Now, in terms of whether the parliamentary debate will soften the push for the hard Brexit, it really depends what's going to happen during that parliamentary discussion. House of Commons involved, Lords involved. What is the official opposition going to be asking for? We've already heard that the Liberal Democrats are asking for a second referendum. Some MPs will say, even though they voted for Remain, they will not challenge anything to do with the referendum. Other ones are saying, well, wait a minute, I actually need to go back and discuss with my voters what are their feelings at the moment. They may have voted for stay and they want to leave, or they may have voted for leave and they want to stay, because obviously many things have changed in the last 5 months. I think the parliamentary debate will be interesting, to use your analogy if I may, in the dance around about what the government will have to reveal about its wish list, its strategy, and what it will not provide to Parliament. Prospects of sterling. Well, very interesting. I know some people in the audience, in fact, are currency traders, so they are probably better to talk about that than I am, and I'll do my usual disclaimer. This is not financial advice. Stock markets can go down as well as up, sterling, etc. Sterling for me seems very interesting, because I keep a close eye on it, and of course it fell. And then it fell some more. And I said, it must be the bottom. And it fell again, so probably I'm not the greatest on currency. And then it's gone up again. So it seems to be bouncing around. And I suppose something of interest that I should have possibly mentioned earlier is they're talking now that a lot of companies apparently have hedged for 5 months, or possibly 6, which means those hedges are going to end very soon, which may be interesting in terms of inflation, but also the movement of sterling. So I'm afraid at this moment in time, I'm going to have to say, I don't know. Therefore, of course, so a question of timing. It's always difficult to call the bottom of a market, bottom of currency, and of course, will prices go down or up in real estate? This is one of the very interesting things. We're talking, say, about real estate, as people often are. Has it got further to go? Certainly, some of the big estate, realtors, if you want, the real estate people, are saying that prime London is certainly soft, and using the phrase that vendors or sellers will have to be more accommodating with their pricing. Now, that may presuppose prices may go down, or they may not. It really is a difficult situation, I think. But as ever, if anybody's going to invest in anything, including companies, or indeed markets or real estate, it's always dangerous. Have you called it correctly or not? And then some people in the stock market say, well, don't try and time the market. Other ones say, do try and time the market. Hopefully that uncertain response has helped you.
Yeah, very good. Gentleman over there, and then you. Yes, thank you.
Hello. I'd just like to ask a question about the constitutional structure and what your opinion is on why the UK would trigger Article 50 in the first place. It seems to me if we just reinterpret the vote, it wasn't necessarily a UK-wide vote to leave. England outside of London and Wales voted to leave, but the rest voted to stay. So, I mean, There seems to be another option, which is the Greenland option, which is just give England outside of London and Wales a special status. Don't trigger Article 50, don't lose market access, don't lose passporting rights, keep UK representation in the EU, and also don't have 2 years only to negotiate it. Because all the EU can do is just stall, and then at the end of the 2 years, it's the Hobson's choice. You've just got to accept what's on the table. But if you just reinterpret the result a law and allow England and Wales to have work permits or whatever, but take yourself away from the 2-year restriction, there just seems like so much more of an opportunity. And I'd like to get your opinion on that, please. Thank you.
Well, thank you. Thank you, as ever. I think there's at least 5 questions in there, so there's 8 glasses of wine already. Constitutional questions. I thought I was here to talk about the economy, but I'll certainly give it a go, going back to my politics days. I think, first of all, you're talking about the outcome of the referendum, whether it could be treated as a recommendation, possibly, for action. And, of course, the government at the moment is saying, no, it's a mandate for action, in that Brexit means Brexit. Though, of course, we're not really sure what Brexit means. So at the moment, and I think all the way in the lead up to it, to be fair to the people who wish to leave, it was always going to be taken that it would be a mandate for action. So I think it would be very difficult to unwind that one. Certainly some people I've been having conversations with have talked about whether there could be a second referendum, or possibly more plausibly, whether the final deal has to go to the great British public to vote on, which is quite interesting. Because as you saw in my first slide, the vote was in or out, yes or no. But then, of course, and I don't know when, many years in the future, there might be a new agreement, and maybe you'll have to take a vote on that or not. But I think where we are at the moment, it's been taken as a mandate for action, and Brexit means Brexit. Then which obviously relates into triggering Article 50. You spoke about 2 years and maybe the EU could just dawdle, take its time, etc. There is another one, of course, which our friends in Europe are not particularly happy with, including Monsieur Hollande in France, who says, why don't you just get on with it? Now, we also have the opportunity to dawdle with it and Article 50, because one of the aspects which we talked about earlier relating to the court case is that it may not occur by the end of March. Now, there's nothing to say it has to occur by then, because obviously when this all was written, it really wasn't expected it would ever be used. However, we seem to be using it. So it does go a bit, I suppose, both ways. But of course, there are parties within Europe who would like a deal, who very much wish to continue the economic and political relationship between Europe and the UK. So it's not all doom and gloom. They're looking past it and saying, okay, we've had a serious argument, we've decided to fall out, we've decided possibly to live apart, but we still want to be friends, and how can we do that? So I think there is goodwill on both sides. There's also some negative will on both sides, and I think 5 months is still early for this kind of significant divorce, which is obviously, we've been together, as it were, since 1976. Your last point, no, there are 2 points, weren't there? Special status, so particularly no doubt for Scotland and Northern Ireland. An interesting one, again, constitutional issues. When can that be done? Because obviously there are countries within the EU at the moment that also have restive regions who would also like to split. And possibly those countries will not allow, therefore, a special deal in favour, particularly of Scotland, to occur. And your final bit, 2 years, clearly not long enough, I agree, and probably it was written so nobody would ever use it, but we are doing. So, crikey, maybe that'll make somebody an excellent PhD thesis in the future. I'll have some more water.
Yeah, this gentleman. Where's the microphone? Yeah, thank you.
So my question follows on in terms of the phase from that to the 2-year period. Given that the US has also become somewhat of a wild card in the last week, do do you see any other European nations kind of triggering a domino effect? There's already talk of other right-wing governments in Europe. If other countries decided they also wanted to exit the EU, what would happen in that 2-year period? I mean, could it be a bit of a free-for-all?
Excellent. Yes. A US wildcard. I believe something in fact has happened in America recently to add to the mix. I was expecting a question, possibly, we might get it, so I'm not going to preempt it, about the US and the UK and China. Talking about other countries and, well, I can't say Brexit, I suppose, but exit, whether it's Grexit, the Netherlands is possibly looking at it, France has certainly mentioned it with Marine Le Pen. You mentioned the 2-year period. I don't think that's probably going to come into action because it's going to take a long time, a bit like it did here, to gain the momentum, first of all, to say, is it a good idea if we leave the European Union? And then actually put the aspects in place to take it, no doubt, to a referendum, which, of course, they've still got to win, which obviously there may be ex-prime ministers who could help them with putting that all together. I think other European countries, and I imagine the way it's being dealt with my colleagues in some continental countries, meaning mainland Europe, so the IOD has branches in the Netherlands and Belgium and France, for example. They are saying, of course, that other European countries are using the Brexit as a particular thing to motivate people not to leave. So rather than spurring possible let's all run away and join Brexit in this brave new world, they're possibly saying, no, we're not going to do it. However, to put it on the other side, no doubt Marine Le Pen, well, let me rephrase that. The intelligence at the moment is Marine Le Pen is saying, if Nigel Farage can do it, we can do it. And then she's saying, well, if Donald Trump can get elected in America with a smaller amount of the popular vote than Hillary Clinton against all the odds, then obviously I can do it as well. So I think it goes both ways, and I think some countries in Europe will also be looking at their agreement with the European Union on a cost-benefit analysis and saying, does this work for us or not? But I think, bearing in mind this morning's article, where the bill might be 40 to 60 billion euros if they leave, I'll go, ooh. The article did make one important thing. It said if you push the UK too hard, it might say, oh, I tell you what, why don't you just sue us for the money?
All right, lady at the back, and then in the front, and you. So we'll have 3 questions. Yeah, you go ahead first.
You've got to wait for the microphone. She doesn't get paid unless you get the microphone.
You spoke a bit about Britain having a special relationship with China and being quite welcoming to Chinese investment, and partly being seen as a gateway to the rest of Europe. If we do leave the European Union, do you think there are any other countries in Europe that are angling for that position to be seen as a gateway for Chinese investment in the European Union?
Yeah.
That's a very good question.
Yeah.
Do you want to
Go ahead.
add something to that? I'll get again. I thought originally, until recently, 2 weeks ago, Germany was playing that one. Because obviously Germany has an enormous trading relationship with China. And if anything, the senior teams from Germany have been to China much more frequently than the British teams. However, there does seem to be a change in atmosphere, as I mentioned to you, between Germany and China at the moment. Because also they've got some internal discontent around about immigration, outside influence, and what Germans are particularly good at, and very proud of course, is high-tech innovation. And so they are very nervous. So that would have been my front-runner. Probably the front-runner anyway, even the UK, I suppose. So I see that being downgraded a little bit, and of course there was, how can I put this, a misunderstanding of meeting schedules recently in China, which meant that a certain German minister couldn't have an audience with somebody. A regrettable mistake, but these things do occur. Similarly as well, I suppose France has been trying to place itself as a good friend of China, but it doesn't have the natural linkage there, and possibly with the socialist government in place at the moment, it doesn't have the flexibility and the rapport with China. Those should be the two ones that immediately spring to mind for me. But Kent, maybe, do you have any other comments on that? Or?
It's your moment, basically.
Oh, it's my moment, okay.
Absolutely.
Okay.
Yeah.
Possibly Ireland. Somebody just said Ireland. There might be something there in Ireland. The thing is with Ireland, great nation, been there, played very good rugby, so that's a useful thing, is it's the size. So UK is a big old economy. Germany is a big economy. France is a big economy. Ireland's not. Now, the other one, therefore, you'd have to go for is Italy. And is there a strong relationship Italy-China? Not that I'm aware of.
No.
Doesn't mean it won't be in the future.
The gentleman at the front, where's the microphone? Yeah. And then the last one will be the gentleman over there. Yeah.
So thank you for very interesting talk. I was wondering to ask about something a bit wider than Brexit, which is the UK's trade deficit and also the deficit in the UK current account, which even before Brexit had been running at a noticeable percentage of GDP. And I think the traditional wisdom has been that if this was the case, alarm bells should be ringing, and no alarm bells were ringing. Now Brexit's happened and the pound is falling. Should more alarm bells be ringing about our trade deficit than they seem to be right now?
Interesting. Thank you very much for the question on the trade deficit, current account. I think alarm bells have been ringing loudly for quite a long time, and certainly where sterling is at the moment, it is not a helpful movement. I'm going to use the phrase new normal, because it seems all around the world, classical macroeconomics don't seem to be functioning as they should do. So meaning there can be quite large trade deficits ran without significant expected results occurring, which is most confusing at best. Because I think as you've made it very wide, I'll make it even wider. Because obviously we talk about money supply and economics. Once we have this enormous amount of quantitative easing, it seems that trade deficits, current account deficits, are somehow lost in all the economic data. And similarly, we still have an enormously strong, possibly overvalued stock market. All these are very interesting. I think there's international trade flows going backwards and forward. The yen's very strong. Now that Trump is president-elect, then we're looking at the American stock markets. Will there be another rate rise? They're saying possibly not. Yeah, how is that going to affect? Will there be a taper tantrum? I think at this moment in time, the trade deficit is concerning, but just I suppose like Brexit, to pull it back there, it seems that classical economics, classical business at the moment is not being ran solely by economics, but also by politics. And therefore, some of those alarm bells may be going off, or somebody's putting a pillow on them at the moment so they don't ring quite as loudly.
We are running out of time. We have the final question to ask. Thank you. Go ahead.
For an excellent presentation. If you were a Martian coming down from space, wouldn't you be a little perplexed about all the fuss that we're making about the EU, given that it's a declining customs union? It's only 15%, I think, of world GDP now. I think when we joined it was about 40. Why are we beating ourselves up over this when we should be focusing on the growing markets in Southeast Asia, such as China?
Thank you very much. I think one of the things to mention with the EU, of course, it has its own significant problems. Some of those are political, as I think we've heard from the good questions already. Is it a high-performing, optimum political union? The jury probably isn't out. It's probably going to say, no, it's not. It needs to improve. Is it a good economic union? Is it a good transfer union, which obviously may have to be the basis of having a single currency within those countries? It doesn't seem to be working too well in that, where you have Frankfurt setting an interest rate that may be quite useful for Germany, but may not be terribly good for Portugal or Greece. So there are certainly challenges within that one. And I think one of the earlier questions, whether there's going to be another exit, etc., goes on to that. There is some discontent. The economic model doesn't seem to be working. There's large deficits being ran. Tax revenues are going down. There's demographic issues occurring. And there are also some very unpleasant politics occurring in certain parts of the European Union. Why are we caring about it? What would we say to this Martian? Well, first of all, we'd say, hello, can we trade with you? Because at the moment, we need to trade with anybody. I think, as I said earlier with the dance analogy, I think we should continue to engage with our EU 27 friends as much as we can, but at the same time, taking Kent's point from earlier, we should correctly be taking this opportunity to focus more on what other countries can do with us. So whether that is China, whether that is Angola, whether that is Peru, and taking those bits. So what I would like in an ideal world for business is that we continue to have successful trade with EU 27, probably difficult. At the same time, we maintain and grow our trade with China. At the same time, we maintain and grow our trade with other countries. That's what I would like in an ideal world. But of course, there's always going to be cross conflicts, and all the partners are not going to get on together. But to the Martian, I would say, stick around, my friend. It's going to get more complicated.
On that note, thank you all very much, and also thank you, Bill. It's wonderful. We have a simple reception on the 5th floor of the old building. You're all welcome. Thank you.
Thank you. Well done.
Excellent. Excellent.
I make that about 18 glasses of wine.
Yes, you completely deserve it. Yeah, absolutely. Yeah, it's a good session.
We're all okay?
Yeah,
All right
excellent.
from the techie bit, etc. Well done. And thank you for your help and support, etc.
Yes, yes. Well, I'm a bit thirsty, so I need a drink.
You were going to ask a question, weren't you?
Oh, sure. Yeah. If we're
I thought you were going to be the last one.
need
And then he went behind you.
a drink.
Okay. Oh, yeah. Oh, really? Yeah, sure. Oh, right, yeah, because the interesting thing was I chaired an event